Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday, the 8th of October 2020, and we're deviating slightly from the norm and looking at how the mega wealthy are capitalising on the current global financial crisis, utilising low interest rates. Okay, before we look at mega wealthy exploitation, which to be fair, quite likely most of us would do in a similar situation, we just wish to draw your attention to yesterday's midweek financial update, where gold stood at $1,887 and silver at $23.79. Now, the time of producing that video was an hour earlier than today, with today's video being produced at 2200 hours GMT plus 1. Now, currently gold is $1,893 and silver stands at $23.84. So gold is $6 higher and silver is some 5 cents higher. Both just marginally up on yesterday's price, with equity markets broadly up between 0.5% and 1%, and the dollar index just marginally lower at 93.58. So nothing particularly exciting. Now today we wanted to do something different, simply because markets are pretty uneventful. So most of us, no doubt, remember the 2008 financial crisis, primarily caused, but not exclusively, but primarily caused by hundreds of billions of dollars of what we now know to be junk bond sales created out of the subprime mortgage market. Now, today's economic crisis is a little different, or at least the cause of it. The coronavirus being either the catalyst or the causation of what we are now experiencing. That said, the crisis has forced central banks around the world to reduce interest rates to such incredibly low levels, the super rich are capitalising on this access to cheap money. So let's take a look at an interesting article published a week ago by Bloomberg about this very issue. Bloomberg article dated October 2nd, 2020. Headline: The ultra-rich are using giant home loans to access cheap credit. The penthouse at 15 Central Park West has everything you'd expect for an $88 million property. 6,744 square feet of space, a wraparound terrace, and killer views of Manhattan. Since June, the apartment owned by the family of Russian billionaire Dmitry Rybolovlev has an added feature available just for the super rich. A $42.5 million mortgage from JP Morgan Chase & Co. with a 2.9% interest rate. Payments are about $177,000 a month. Rybolovlev, who declined to comment through a spokesman, bought the apartment from Sandy Weil about a decade ago for his daughter Ekaterina. The family tried to sell it a few years later as prices for ultra-expensive properties in the city had started to slip. Instead, they choose to leverage the asset. While the super-sized mortgage is one of the biggest arranged in recent months, it's far from the only one. Lenders are increasingly providing credit to their most valuable clients after central banks slashed interest rates to protect the economy from the effects of the COVID-19 pandemic. That's enabling the ultra-wealthy to borrow to invest in stock markets, cryptocurrencies, or real estate, even as protracted unemployment drives serious delinquencies to their highest levels since 2010. Rates are low, and so clients are looking to take advantage, using some form of debt to be able to access cheap money, said KCS Creedman, a financial advisor at the Broad Group, a New York-based unit of UBS Global Wealth Management. It's also showing up in the data for the merely affluent. After cratering during the early days of the pandemic, the number of jumbo home loans of $766,000 or more increased by more than two-thirds in August from a year earlier, according to the US Mortgage Bankers Association. Helping driving that trend, more people buying larger suburban or rural houses as they seek refuge from cities, homeowners choosing to refinance, as well as a soaring stock market. The higher end of the mortgage market is very focused on the returns in financial markets, said Michael Frantantoni, the association's chief economist. That's providing the resources. New York is one of the few major cities to disclose mortgage data publicly. Outdoor advertising mogul Drew Katz obtained a $15 million mortgage in August for a New York penthouse that he bought 4 years ago for $22 million, filings show. In April, hedge fund founder Dan Och obtained a $50 million mortgage for a home on Manhattan's Billionaire Row that he acquired last year. The following month, a U.S. company controlled by Mexican heiress Karen Virginia Beckman, part of the family behind Jose Cuervo Tequila, received a $19 million mortgage for a condo it bought 3 years ago in the same area. A representative for Och and Beckman declined to comment, while Katz didn't respond to a request for comment made through his family's foundation. The mega mortgages happened even as some of New York's richest residents fled the city amid the coronavirus pandemic and concerns over quality of life issues. The exodus added to a glut of luxury apartments on the market in Manhattan, and should prices soften further, could pose risks for lenders. Unsold listings in Manhattan in the third quarter surged to 9,319, a level not seen since the midst of the global financial crisis 11 years ago. Is this going to lead to people leaving higher density cities? Frantantoni said. It certainly seems like that's happening in New York and San Francisco. In addition to New York and San Francisco, real estate brokers and private bankers from Los Angeles to London are also seeing an increase in loans taken by people who don't necessarily need the cash. In the English capital, the super rich have snapped up newly built homes for more than £20 million or $26 million during the pandemic, often obtaining a discount and sometimes buying more than one unit at once, according to Charles Bolton, Chief Executive Officer of HSBC Holdings plc's UK private bank. Meantime, sales of UK homes costing over £1 million doubled in August, outperforming the rest of the nation's housing market, with pricey properties outside of London benefiting the most. While a number of clients have deleveraged, there's also been a pronounced shift in borrowing appetite from a number of our ultra-high net worth clients in recent months, Bolton said. Debt is the cheapest it's ever been, and there are significant investment opportunities for our clients where they are able to move quickly. The US mortgage market, meantime, shows a widening gap between winners and losers as affluent borrowers take advantage of long-term interest rates at or below 3%, while a rising number of out-of-work homeowners fall behind on payments. The world's super-rich and merely wealthy, therefore, are likely to emerge with the highest returns from interest rates hitting record lows. In reality, the richer you are, the more you borrow, said Remy Frank, head of BNP Paribas Wealth Management's key client group, and the banks are happy to lend to very rich people. What concerns us about this is that enormous mortgages are being taken out on properties that may not sustain such prices for long, while the proceeds are themselves invested in equity markets, which so far have driven prices to all-time highs and now currently near all-time highs, which too may not be sustainable, certainly not indefinitely. One day, all of this will have to stop. And the question, of course, is where will the chips then land? Needless to say, many of these individuals will have made their extra cash by then and quite possibly be long gone. Just goes to show that when you have money, it's often easier to make even more. What do you think? Do share your thoughts. An interesting side addition to what we normally publish. Meanwhile, if you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.